Africa initiative. Somet, thank you for making time.
Thank you.
Let me begin with you, Somet. When we say responsible banking, what comes to your mind?
Responsible banking, well, I'm not in the banking industry, I'm more in the technology space. But what I look at responsible banking is, organizations as banks delivering service to their customers in a way that builds trust with those customers. Because we all know if you don't build trust, then your customers stop using your service. So I'd say, building capabilities and delivering service and experiences to your customers that actually builds trust.
Mm-hmm. Sam, you've been in the banking space for quite some time. Last time we spoke, you said you have over 20 years in the banking space. What would you say are the building tenets towards responsible banking, or rather the principles of responsible banking?
What I can say, when you look at what a bank does, basically a bank is an intermediary between those who have savings and those who want to borrow. And therefore, a bank takes responsibility to both parties. And so and the relationship between one who puts money in the bank and the bank itself is that of debtor creditor. Mm-hmm. That means the customer lends the money to the bank. And in lending the money to the bank, they are not taking any collateral. And so they expect a high level of trust. Mm-hmm. They expect a high level of stability. They expect that the bank will be able to keep its promises. If money is put on a current account and a customer wants to draw the money to make a payment, they must find the money available, and the bank must facilitate that to happen. And so that is how then the relationship grows. Over time, as people come to expect certain things from banks, in the sense that the quality of service, the diversity of offerings that they give to customers. If I want to keep my money there for 1 year, they cannot keep the money on the same terms like somebody who wants to keep the money for 1 month. Both of us will be treated differently. So that relationship then develops over time, and you find that if it's a good relationship, then people always want to take money to the bank. If it's not working, people begin to withdraw and fear the bank and start taking monies to the mattress. Okay. And that doesn't become beneficial to the economy. So because if we look at how much money is in the banking sector and how much money is actually under people's mattresses, it could be a tale of a low level of confidence that does exist between the customer and the bank.
Dr. I know you're in the education space, but I'd like to find out from you, do you think from everything Mr. Mkoko has said, Kenyans are getting that kind of relationship and that kind of responsible banking from their banks?
That's a difficult one. You're putting me on the spot. But anyhow, I'll try and respond to it in a more macro way. And what I mean is, as an academic, I want to look at it from the relationship between the bank, the customer, and the economy at large. And maybe to just expand a bit, what responsible banking could be, is you're looking at sustainability in a bigger way. So issues of climate change come in, issues of circular economies come in, issues of development goals come in. And so when you look at that, then you can say, on one hand, yes, Kenyans are getting it, or the customer is getting it, because even in these Think Business Awards, if you look at the categories we have put in, banks have really tried to say, okay, I'm funding agribusiness, I'm innovating around agribusiness, I'm innovating around sustainability. And therefore you can say, okay, yes, we are getting there. But then there is the other hand. Of course, starting 2016 to now, banking has not been the normal place. So if I start from interest rate caps and then now COVID-19 and very many things that have happened in the Kenyan economy, the banker is torn between, do I lower my rates? Do I heighten my rates? And what is responsible banking to a Kenyan? Maybe they're thinking, I want the lowest rate, but probably that's not the case. We want an open rate, not the lowest rate. So it is a yes and no, and I think we're trying.
So Matt, I'll come to you briefly, but Sam, picking up from where Dr. has left it, it's a tricky balance, but on one hand, the bank has to remain in operation, but on the other hand, they have an obligation towards the customer. Where's the middle ground?
It's always been a tricky thing to balance between the services the banks would give to depositors and what they would give to borrowers. And so the link is to be able to say, if I am going to extend credit to customers who want to borrow to invest or run their businesses, I also must be able to pay the person who is giving me the deposit. So you'd find that there's always, you have to strike that balance. And so in essence, you're looking at creating an efficient system that is able to serve both parties and have a positive contribution to the entire economy. And that's then what brings the challenge. And sometimes we have seen situations where some banks have actually gone the wrong way, where because of the manner in which they manage their credit risks, in which they invest customers' funds, they find themselves in trouble. And you find a situation whereby a bank has closed and is closed with people's money. That usually brings in a shake in the confidence of the banking system, and it is something that should never be encouraged to happen, because, as we said, if people do not develop sufficient trust in the system, then we'll find that many of them will not engage with banking institutions.
So Matt, I'd like to find out from you, how can people develop trust in the banks, and what should banks do in order to ensure that their customers can trust them?
I think you can look at it both sides, both from the banks itself and definitely the consumers. So from the bank side is looking at, how do you rethink or reinvent how you deliver services to your customers. And at this point in time, I think technology plays a very critical role in that. So being able to rethink and use and leverage on technology of this day to deliver the best service that you can to your customers, but also at the same time being able to cut down on costs and risks, and sort of that is the benefit towards the bank. Now for the end consumers is also being able to gain knowledge and skills around how does technology, how does your environment today affect the services that you get from banks. So you see now that a lot of banking and interactions between your consumers and the banks are now moving online. You now have a plethora of people out there who are taking advantage. I always say never underestimate human ingenuity. So it is upon also for us as consumers to also look at, and this could be an avenue for banks to also educate their consumers around what threats are possibly out there, and what are the practices that consumers can put in place to make sure that as they operate and they transact with their money across different systems, that they are actually able to keep themselves safe.
Dr. I'd like to come to you. Only recently are we seeing banks begin to seriously uptake technology and start taking things like cybersecurity very seriously. Why are we seeing a sluggish pace in adopting the most essential of technologies that could streamline the efficiency of services that they're offering to Kenyans?
Thank you for that question. I think if you look at it from a 2020 perspective, then probably that question has now run very fast, such that now everyone is actually taking up technology. In terms of how to afford now innovative offering to can I say, common mwananchi, now that we're in the Kenyan space, you realize that most of the technology is based on very maybe heavy data intensive and the like. So I think there is still space for innovation in the data space before you can be able to now massively reach the low ends of the economy. And I think Sumet could be well placed to respond to the question of innovation in the data space, so that you can reach those people who are currently predominantly USSD based and not data intensive. But I think, like you rightly put it, only recently banks have taken on this fintech and all these solutions quite aggressively. And I think the integration between fintech players and then commercial banking will play a very big role going forward.
So Matt, quickly.
So definitely there's a lot of innovation both in private, public sector, banking, and the different solution providers, startups who are creating innovative solutions. So I think the opportunity for the larger banks of today to partner with these startups to create really interesting solutions is quite interesting.
And speaking of interesting solutions, Metropole Corporation Limited has been at the forefront. Recently we launched 2 products. Maybe some you could get into it and just why we saw the need, or why rather Metropole Corporation saw the need to come up with such innovative products for the market.
Um, well, I'll cut through the question because there's a lot involved in that. Metropole basically is licensed as a credit reference bureau, and as a credit reference bureau, what we provide is a mechanism through which banks share information on their customers, and therefore that helps to build customer profiles, and the same profiles are then used by banks to assess the customer credit worthiness. Information asymmetry has been a challenge in this market for a long time, and it contributed to part of the high interest rates that we saw banks charging customers, because if a bank is not able to evaluate a customer's risk profile, then either they are going to ask for collateral or they will be trying to charge a higher interest, in which case to try and compensate for what they do not know. When that mechanism started, obviously what we have seen in the market is that there has been more uptake of credit, more customers are taking credit, and also there has been an increasing element of fraud. So that you find, because lending is now going digital, banks are no longer having to meet their customer on face-to-face. All the transactions are happening in the digital space. See, if I take your ID and I apply a telephone line on that and apply for credit and use your profile, that transaction will go through. But at the end of the day, the identity of the person behind that particular transaction may not be the actual person. And so credit information sharing, digitization of banking transaction, which is supported by emerging technology, is also emerging with other challenges that pose additional risks to what the banks are facing. As the credit risk goes down, operational risk begin to go up. So you find that the bank has got to find a balance through which, and it can only then be supported by other players who are facilitating identification, and also being able to provide additional alternative information to measure credit customer risk.
Good point you've raised there, and I want to bring in Samad because you're in the technology space. How can you come in and complement banks in this space?
So in the world that I work in within Microsoft and working with different startups and partners, I think there are technologies that definitely give the opportunity to look at how do we help banks reduce that risk of fraud by taking a proactive approach. Now, we have banks hold a lot of data points about their customers. How do we leverage on that to create experiences where banks can able to proactively look at those risks and create engines that will allow them to reduce that risk so as to deliver services more efficiently? So definitely technology does play a key role, but I think also better enough is looking at how do banks create really interesting partnerships with those solution providers, the startups, the companies that build these technologies. So that way you have an ecosystem of players that have solutions that actually cater for all these challenges that the bank has.
Most of the time when you talk to people in the IT space, they say banks do not have budgets for cybersecurity.
Well, I don't work in a bank, so I wouldn't know if they have budgets.
You work in the cybersecurity space. How many banks have come to you with the budgets?
So I think sometimes I think we go too overboard in cybersecurity, and people get very scared about it. But it starts as simple as people understanding their behaviors, how they transact. So I know people go crazy. Oh, we need to implement this massive system that costs millions of dollars. But if you actually look at it, it starts by just changing a few things within the banks, and that will massively improve how you deliver services, but also reduce that risk.
Dr. I want to find out from you, what's in it for banks if they adopt responsible banking principles? Where's the light at the end of the tunnel for them? Because they're in a business.
Great. I will go back to the very old adage of every business operates within an environment. That environment, the ecosystem, the customers have given a license to operate, such that if it is removed, that license, then you don't have anywhere to operate. It's unfortunate we're in circumstances of COVID-19, but I'll use that. So maybe you want to sell or you want to do business within the COVID-19 environment, and there is no one to sell to, so go out there and sell. Let's see. And it's the same thing. When you adopt responsible banking, you're creating a circular economy. So all the way from bottom of the pyramid, the resources are going around. So you come from, say, agribusiness, you come from climate change, you come from sustainability, then it comes back into the banking system, because the banks are the intermediaries that are actually channeling all this economic activity. And the most important thing is banks will then, for once, be out of this accusation that they are not linked to the real economy. And I think that's a big winner for banks.
Sam, there's this thing that's called textbook economics, and somebody might accuse Daktari of that. From a banker's perspective, how practical is that?
Well, I think if there's one industry that really doesn't practice textbook economics, it's the banking industry. Yes, there are guidelines provided by the regulator, also macroeconomic drivers that banks are supposed to observe. But if you look at the actual practical banking as it happens here, then you start asking a lot of questions. How do they, for example, fix their interest rates? How, for example, how do they select their customers? How do they develop products? You would find that if you look at the profitability of the banking industry in Kenya vis-a-vis the customers that they're supposed to support, there's such a disparity that you wonder, how does it happen that if you are in a business relationship, one party prospers much better than the other party? So there are all questions, that all manner of questions, and when we go back to the textbooks, what we read in the textbook is not what we see on the ground.
Yeah.
And so there must be another way in which actual banking practice is actually carried out. And there have been a lot of attacks on the banks, both by Parliament, when the interest rate capping happened. What was driving that? The issue was that the banking industry continued to be more profitable while their very customers are becoming poorer. So there must be a way in which this can be controlled. But to go to what one would expect is that there must be instruments in the economy that can be used to navigate things. Yeah. What I keep saying is that there's a fundamental flaw in the structure of the financial system in this country, in which you find that you have a strong banking industry and a weak capital market. And when banks, for example, are looking at creating long-term liabilities, mortgages, what sort of funding do they give to this? They're using short-term funds to create long-term assets. Why don't they match those long-term assets with long-term liabilities, bonds issued on the capital market? That would see a moderation of the interest rate. Because if you are taking short-term funds, somebody who is on short-term funds is likely to come for the money faster. You go to the maturity transformation between taking deposits on short-term and lending on long-term is quite a challenge. And so you find that in the whole of that, a lot of things come up that are not clearly understood. The other thing that we keep asking, for example, the mortgage industry, in terms of creating more mortgages, why don't we have securitization of mortgages so that people who have invested or institutions that create mortgages can be able to sell those mortgages to investors through a securitization process and be able to create more mortgages, because housing is one of the factors that is a challenge in this market.
But just on that mortgage point, I think one of the reasons why Kenya has about 26,000 mortgages in a population of 47 million is because the mortgages are exorbitant, the prices. And like you said, I'm giving you a huge amount of money, but I'm giving you a very short time to repay it back.
Yes, there's clearly a mismatch in the funding structure. Two is that the origination, the suppliers of the mortgage themselves, the supply of mortgages has been skewed to a certain category of the market. So you find only the kind of houses you find being put up do not fit what you call the guy who really needs those houses, because the lower cadre of society. Nobody's building houses for those people. If you go to estates like Mathare, whatever, you find people who are putting up structures that are very dangerous and which cannot be funded on mortgage purposes. So mortgages have targeted a certain market, which is a very small market, And that's why you'll find that mismatch in terms of supply and demand of what is available.
Dr. When the interest rate cap was introduced, it was supposed to ensure that Kenyans can breathe a sigh of relief when they go to their banks to borrow. However, what happened is we saw banks held onto their money and opted to invest the money elsewhere, government bonds, the real estate sector, instead of lending because the risk was high. And many Kenyans, as we know it, SMEs do not have collateral. Then the rate cap was removed, but everybody is very scared to introduce new rates because they don't want to be termed greedy. So where does that leave that interest rate conversation?
Very tough questions. Let me look at it at the time of the cap and probably speak on the side of banks a bit. So I am in business, I am a lender. On one hand, I'm faced with credit risk, which is paying me a rate of 13%.
A month?
Per year.
Okay.
On the other hand, I'm faced with, call it risk-free, government security that is paying me 12.75%. What will you take? Will I take credit risk evaluation that pays me effectively 0.25%, or will I take the risk-free of 12.75%? It makes all sense for me to put my money on this other side that is not exposed to risk. But of course, that then changed the role of banks from the intermediation role to then the investment role, which of course was a misnomer in the economy. Who is to accuse? Is it the bank? Is it central bank? Is it government? I leave that question open, so maybe someone else can. Yeah, so that was a very interesting mix of things that we couldn't easily come out of. Where does this leave the conversation even after lifting? Who will run ahead first? Who will not run ahead first? I think the conversation is still very big. I remember in one of the Kenya Bankers Conference, there was this question of why does Kenya enjoy very big spreads of 8%, 7%, when banks in Malaysia only get 4%, 3%, they still survive.
China, it's way cheaper to borrow. But even in Africa, Senegal, Cote d'Ivoire, 5%, 6% interest rates.
Good, but the bankers have an answer to that, and they'll tell you, you put your bank or any retail banking branch somewhere, even Kenyatta Avenue now, leave alone even outside town. How many security guards will you put? How many doors will you put? All those cyber security is all here. So the cost of doing business is very high. Therefore, you must cover that spread. So we have a challenge, like Sam said, on the real economy side that we really need to deal with, which then will make banks real intermediaries. And so the conversation to me is not bank versus the customer, but it's a bank within the environment within which it operates.
And you've mentioned that you're a lender. I want to presume you're a digital lender?
Okay, whichever lender.
Okay, you've already preempted my question. But during the Afro-Asia FinTech Festival, and even the Central Bank of Kenya governor was there, he said that because of the cash crunch in the market, digital lenders were able to come up very first, and they were the easiest solution. But the rates they were charging per month were almost triple or tenfold what the banks were charging on a yearly basis. So on that front also, if you're in that space, how do we ensure that you stay in business but you're responsible to the borrower?
In fact, maybe 10 times is an understatement, because 360% vis-a-vis 13%, that is
a lot of money.
Yeah, so much. However, I've come to learn one thing. The Kenyan borrower, especially the low-end borrower, is not purchasing rates. So the price question probably doesn't really ring in their mind so much. What they are looking for is efficiency and access. Now, if you can give me access at the easiest way, so we started off with this whole issue of security, so you ask me for an ID, then you want me to bring my wife, you want me to bring my children, definitely you will lend to me. But if all you want from me is an ID number, and in the evening I have my money, or within the next 10 minutes I have my money, then that's what Kenyans are going for.
What is credit, what does the CRB say with regards to digital lending and the default rate, Sam?
First, I need to add my voice to what Dr. has just said in terms of the cost structure that does exist. There is the element of the cost structure, which is Kenya is perceived to be a high cost operating environment. But also, there's also the perception of risk. There's the perception that risk in this market is extremely high. If you look at NPL rates, they're above 10%. And so when you factor that plus the reason for high costs, then you begin to see the argument that a lender or a bank would be using to try and fix what their interest rates should be, and also the profit margins that they expect to get in this high risk environment. So other than cost, there's also the perception of risk in this market. But the introduction of Credit Reference Bureau actually was supposed to tackle the issue of that perception of risk, because it arises out of information asymmetry. Now that you have all the information you require about a borrower, can you therefore try to match the price that you're charging to the risk of the customer?
Good.
That hasn't happened. We need to see a situation whereby customers are being charged a price that reflects their risk profile. Yes, it is in the laws, but the implementation of all this becomes quite a challenge. And banks will always find a way in which they charge the interest that they think would compensate them for the risk that they are taking. We know there has been an attempt to provide an APR in this market, an annual percentage rate, which takes into account the total cost of credit. Publishing that has been a challenge. So what we are told are actually quotations of nominal rates, but not the actual rate that customers do pay. Again, the level of the transparency that we talked about comes into question. How transparent are banks when quoting prices to their customers? Yeah.
So, Matt, please add your voice here.
No, definitely, I think you're right. Yes, the transparency is quite interesting, but also I think a lot of institutions today in this country, we collect a lot of information around our customers. If I go to a bank today and open an account, I fill in this very long form. I go next year and want a loan, I fill another long form. So one, there is a lot of data that banking institutions have. They also have access to technologies that can do quite a lot of things, but I don't think they're necessarily fully implemented or taken advantage of. And so that creates a situation where we're still, working in the days of the typewriter. We're still implementing the same practices of back in the day, but we say we have this technology. So I don't think the technology is used. And that then opens up this gap where, yes, there's a lack of transparency. There's also a lack of accountability. So will banking institutions take accountability for and responsibility for some of the practices that they're put out? So if today, give an example, a financial institution is compromised, are they able to actually take responsibility and accountability for what happens then moving forward? And do we have the right practices in place to actually touch on that and sort of mitigate those issues? So I think we do have a lot that we have access to and capabilities. I think it's, they say we have more power at our fingertips than entire generations that came before us. The question is what we will do with it.
Now, briefly before I cross over to my other guest, let us introduce Dhimant Shah. He is the CEO of Craft Silicon, and he has been with us via Zoom. Dhimant, you can hear us? Yeah, he's waving. Gentlemen, be kind and wave back.
I think it's,
There you go. I presume you've been following our conversation. Let's hear your 2 cents this far. To my other guest, let us introduce Dhimant Shah.
I have actually been having a lot of audio issues on and off, but I have been...
Dhimant, you can hear me?
Pretty much.
Yeah, he's waving. Gentlemen, be kind and wave back. Dhimant, if you're there with us, I was asking if you've been following the conversation and what your 2 cents are this far. However, as we try to reach back out to him, he's with us. Okay, Dhimant, go ahead. Dhimant, I was asking if you've been following the conversation this far. What are your 2 cents? Well, as our tech team tries to work the magic of technology, Dr. Ari, let me come to you. Where do we go from here?
Where do we go from here? The world is an interesting place now. Before I walked in, I was just telling one of my colleagues that the world has changed forever, be it in banking, be it in education, wherever it is, the world has changed. And I think this is an opportunity for us to sit back and reevaluate. Where do we go as the banking sector now that digital is no longer an option? I mean, it is the business. We must go to it. Fintech is no longer something we drum every other time. It is the business that we must do. And there is something Sam mentioned that I really think we need to think about, which is structured finance. We have, I think, some of the best laws in structured finance on the continent. But unfortunately, we don't do any single structured finance. South Africa is at 40% of the financial and banking sector in structured finance. We need that for us to be able to customize solutions to reach the low-end mwananchi, like we call Wanjiko in this country.
For my viewer who might not understand what structured finance is, very briefly.
I'll give an example. So let's say I am a trader or a farmer. So I come to you and buy fertilizer, which I'm going to use for my farm. So the bank has funded me. I have gone and bought from my supplier. I have 1 acre piece of land. I use some fertilizer, then the balance remains. Where do I take what remains? Nowhere. So either it goes to waste or something. What if we got a product that tells the supplier, if you remain with, say, half a sack of this fertilizer, you have a buyback guarantee. And on the back of that, the supplier has a bank or a financier who is telling them, okay, if you buy back this fertilizer, then you have my guarantee. That's just an example of structured finance. You can do quite a lot of it, and there are real practical problems we face in this country. Mm-hmm. Yeah.
Okay, Dimat, I presume you're with us now?
Yes, now I can hear you.
Okay, so this far, if you've been following your conversation, I'd just like to pick up your brain. What are your 2 cents?
Unfortunately, I have not been able to follow the conversation because of the audio issues. Mm-hmm. But let me go ahead and add my 2 cents into the technology side of it. So fintechs, especially with the topic of responsible banking, fintech actually can help in a big way. It can, earlier, I heard some of our colleagues bring up the trust, delivery of services, stability, availability, and access to money anywhere, anytime. This is where we're making a huge progress in terms of making virtual banking possible, making virtual lending possible, customers being able to borrow money without ever stepping into the bank by applying directly from the mobile platforms. Whether they have smartphones or even the traditional phones. So these are the areas where we feel that we bring a lot of value to the banking sector.
Okay, so what would you say is the role of technology from where you see it in responsible banking?
The role of the banker is really to make, certainly I've been hearing on and off this balance between credit risk versus lending. I also heard a small bit about the SME lending. And I think this is where fintechs can come in and provide non-traditional ways of rating a customer for their creditworthiness. For instance, some of our products allow our partners, which are the banks, to evaluate the transactions a customer does based on their mobile banking records, mobile money spending, the transactions that flow, the type of bills that they're paying. And we assimilate all of this information into coming up with a credible credit score, especially when the credit scores are not available, during this crisis time where the credit reporting has somewhat been restricted. There has to be a different way of evaluating in order to make lending more credible rather than taking a shot in the dark. And I think fintechs like Silicon make a huge progress in these areas.
I'll come to you briefly in a minute as we almost wind up. But Mr. Mkoko, I'd like to find out from you, where do we go from here in terms of responsible banking? But because you're in the credit reference bureau space and this data, how can banks begin adopting this data and using it to foster responsible banking?
Yes, that is the elephant in the room and in the banking industry. When are we going to see data-driven decisions happening? When are we going to see analytics getting into the decision-making process? I think that if you look at these things from a central bank point of view, central bank has tried to push as much as possible for banks to move into risk-based pricing, banks to start sharing. I think they're building a platform where banks can get data real time in terms of what they submit and what they get from the central bank. Banks can now get sharing data with credit reference bureaus at end of day, which is almost going to real time, which means that if a customer gets 2 credit facilities in one day, the bank should be able to see that the customer's profile in real-time basis. What then this means is that more Kenyans are now able to access credit, and because more Kenyans are able to access credit, the opportunity for banks to move to risk-based price is now here. And once they move to risk-based pricing, then it will become easier for customers to start engaging banks to negotiate rates that are appropriate to their risk profile. I think the day that happens in this country, that will be a real milestone, that a customer is aware that I am being overcharged here when my credit, my risk profile is low. And customers, other customers should know that if I do not take care of my credit performance, I am going to access credit at a very high rate. And that's the direction that the industry should now move.
Somet, your parting shots with regards to probably technology in the responsible banking space?
I think we're at an inflection point if you look at what's going on in the world today around technology. So I think, you know, we do have access to these technologies. They have been created by either startups, by either companies. So we do have access to the technology. I think it's time that we now start embracing those technologies, but also put in place practices that then allow us to be, you know, to leverage them responsibly. Because, you know, as I always say, never underestimate human ingenuity.
Never underestimate human ingenuity. Shah, I want to cross over to you. When he says we need to adopt these types of technologies, what types of technologies precisely are we talking about?
So he mentioned a magic word here. Analytics is one of a very strong tool that allows us to put together the data that we
I was asking, Somet has rightfully said that moving forward, banks must adopt technology, and that's something that has to be done. It's 2020, but what different types of technologies or what types of technical structures do they need to put in place moving forward? Come back to you in a few. Finally, Daktari, throughout this conversation, we've said, let's build trust, let's build trust, let's build trust. How can that trust be built between the banker and the customer?
What crosses my mind is the very lengthy forms that Somet talked about that banks used to give to you. And so someone gives you and then they tell you, sign here. So you don't know. So I think there is a lot of customer and consumer education that needs to go into this. And so the consumer knows this is my obligation and this is my right. Then the banker obviously already is, we are taking them to be at a more advantaged place than the consumer. And not to underestimate the whole question of data-driven decision making. So even as you walk to me, I already know what kind of consumer I'm going to meet as a banker.
Okay.
That way, then the trust will be built.
Samuel Mkoko, GMD, Metropole Corporation Limited, Ferdinand Otieno, Strathmore University, and Somet, Microsoft. Thank you for making time. And thank you for having this conversation. And you too can always be a part of this conversation. We've been talking about responsible banking. What are your 2 cents? Do you think your bank is responsible towards you? Do you think they are making data-driven decisions when they are giving you loans, whether they are long-term loans or short-term loans, as Mr. Mkoko said? Do you think they're using data and they're using your credit score to decipher what interest rates they're going to charge you? Is just a blanket cover for everybody? What do you as the end consumer think should be done to ensure that banking is fair, business-wise to the banker, and business-wise equally to you as the end consumer? Talk to us. The hashtag to use is Best Banks in Kenya 2020. This is Think Business Banking Awards 2020, the virtual and coming to you live from Metropole TV. The handle to use is at Metropole TV KE. Atundi Roganga. We shall be sampling some of that feedback. When we come back, we take a short breather, but do not go anywhere because the big awards are coming and you do not want to miss it.
How do you measure success? There are indicators every business uses: revenue, time to market, customer satisfaction. But it's not enough to just measure success. You need to drive it by leveraging your most powerful predictor, people's day-to-day actions. The behaviors of people and teams, how they communicate, collaborate, navigate processes, how they network, innovate, and build customer and partner relationships. All these actions directly impact your business outcomes. Because what separates high-performing organizations from the rest is the way people work. If you could quantify how everyday work impacts your business, then you could better predict and control your outcomes. The good news is you already have the data you need to identify and then replicate the patterns that lead to success. By harnessing these critical insights, you can understand and then influence how work happens. With this knowledge, you can engage your workforce and empower people to move more swiftly, foster innovation, feel happier, and create more value for your customers. This is what will separate you from the pack. A powerful and continuous cycle of improvement that unlocks new potential and predictive capabilities for breakthrough business performance. This is Workplace Intelligence.
It's time to take control of your credit information via our self-service platform. Monitoring your credit listing status has never been this easy. Simply register by dialing *433#, enter your ID number, enter agent number 430430. To complete registration, pay 100 Kenyan shillings via mobile money. You will then receive a link to your credit report. With Cristobal, know your listing status, who has listed you, your Metro score, your credit report, and get your certificate of clearance. You are now empowered to make sound economic decisions. Talk to us today.
Are you an SME looking to grow? At African Guarantee Fund, we believe in the potential of SMEs to drive Africa's growth. While SMEs make up over 80% of Africa's private sector, lack of adequate financing presents a huge barrier to their growth. Our goal is to bridge this financing gap by enabling financial institutions scale up their SME financing towards promotion of economic development and poverty reduction in Africa. Operating in over 40 countries, we have availed more than $2 billion throughout Africa, impacting over 20,000 SMEs, most of which are run by youth and women. Our commitment to empowering women-owned and led SMEs has allowed us to implement the Affirmative Finance Action for Women in Africa, AFAWA, which has a strong financial backing from G7 countries and African Development Bank. We take a strong focus in green financing through our Green Guarantee Facility, boosting the continent's efforts towards climate change mitigation and adaptation. Our very strong AA- rating by Fitch Ratings reflects our financially solid shareholders, strong capital position, and proven business model, and making us an employer of choice. Partner with us today and let's drive Africa's growth. African Guarantee Fund, a guarantee for African growth.
Corona is a bad disease. And you can see our brothers, Lotto Foundation, has come here to help Toy. Toy is a very big commercial market, which the population is very big. And for this particular thing, we are so much delighted, and we did not know that you people still remember us, and may God bless you at this particular juncture. Thank you so much. I tell you this, what Lotto Foundation have done to us is appreciated by all Kibera people, all toy market people.
We are very much grateful for Lotto Foundation for their gesture, because we know very well that as Toy Open Air Market, they treat us as a duty to protect themselves from this particular virus.
Businessmen are doers. Businessmen, they're also thinkers. Businessmen are innovators. How did you come up with this idea? How did you decide to give back to it? And where is the need? Where's the gap?
It was a natural gravitation.
So the doers, the thinkers, and the innovators all catch up on the Entrepreneurs Lounge with me, Ingrid Nantege, every Monday at 7:30 p.m. only on Metropole TV.
There's no news story that is in touch with the needs of the audience like a business news story. Therefore, as a business anchor, it is in my mandate to understand the source of the story and, most importantly, consequences of the story. Which means before I take that script into my hands, I have to be close to the story. I have to experience the story. Or simply, I have to live the story. It's Friday, the 5th of July, 2019. It's 1 p.m., so welcome to Metropole News at 1. My name is Nina Siobhan.
The world has transitioned to a virtual space. I mean, I literally get news, gossip, information on my phone, at home, when I wake up, in the shower, getting ready. When the OOTD has to be up, I mean, you got to give an update on that instant story. With all those interesting things online, you know you girls got you. I, Conchita Lillian, will always be on the lookout so that when you make it trend, I take it on air every Friday at 7:30 p.m. only on Metropole TV. And P.S. I hope your TV works, but if not, we always online.
shilingi 5,000 waweza fanya nazo nini? From street to street and from estate to estate. Tumekuwa tukiangazia biashara kadha wa kadha ambazo tumeweza kupata mawaidha hapa pale, jinsi ya kuwekeza na hata pia kuikuza biashara. Aha, ishakuwa. Haya basi wewe ungana nami Tabitha Muthoni ndani ya show ya Mwananchi. Show ni The Hustle. Kila Alhamisi saa 1:30.
Welcome back to the virtual edition of Think Business Banking Awards 2020. This is the 15th annual edition, and this year it's virtual, coming to you live from Metropole TV at the comfort of your home. As I had mentioned at the beginning, if you're just joining us, the objective of the awards this year is to encourage innovation, prudence and stability in the banking sector by recognizing, awarding and celebrating exemplary performing in this sector. Now, we've heard a plenary session with some of amazing guests in the fintech space, in the banking space, academia and technology on responsible banking. What does it mean? How is Kenya tracking this far? And what needs to be done? I think at the end of the day, all the panelists have agreed that all decisions have to be data driven. That's the only way we'll be responsible to the end consumer, because that means all decisions made by banking institutions are informed by data. We want to keep moving our program for the night, and I want to introduce one guest into the conversation today, and he is one Charles Mukuno. He is a partner at PKF, and he is also a judging process partner. Now, we are done with the plenary discussion, the introduction. We want to get into the real deal, what you've all been waiting for. Not to give you adrenaline, but we want Charles to officially inaugurate the awards, and he's joining us via Zoom. Charles, if you can hear us, thank you for making time. Thank you for being here.
Thank you so much. Leaders of the banking sector, all the other corporate organizations, judges, and all the viewers, good evening. The partners and the management of PKF are very proud to be involved with the Banking Awards as the judging process partner. Our role in this awards has been to provide oversight to the judging process. Whilst maintaining our independence, our main focus has been to protect the integrity of the outcome by ensuring that transparency, objectivity, consistency, is maintained throughout the judging process. These awards have been won on a combination of merits as outlined in the award criteria, which provide variable guidance and measurability in the judging. In competitive awards such as this one, it is important to ensure that your entry and other public available information about your entity clearly demonstrates the judge's response to each of the criteria. We are pleased to say that the panel of the judges, very able, led by the chief judge, consists of notable individuals with an in-depth knowledge on business, as well as accomplished professionals in their fields. The judging process required a combination of judges' own knowledge and expertise, together with the information from the entries received, published financial and non-financial information, and the survey to make the appropriate decision. Ladies and gentlemen, we are happy to state that we are satisfied that the judging process was fair, transparent, objective, and that the results that will be announced in a moment are a true representation of the judging process. We want to thank all the participants and congratulate the winners. It's now my pleasure to introduce the Chief Judge, Dr. Ferdinand Otieno. Dr. Ferdinand is the Dean, School of Mathematics, Strathmore University. He is actively involved in financial market research. Alongside teaching, he heads the Transaction Services Division of Counterplay Africa Limited. He has offered transaction advisory services spanning to mergers and acquisition, company valuation, capital raising, due diligence, and financial reporting assistance to various organizations across different sectors in East Africa. Dr. Ferdinand is also a member of Certified Public Accountant of Kenya, a member of Africa Econometric Society, a member of African Finance and Economic Association, and a member of Africa Society of Investment Professionals. Welcome, Dr. Ferdinand.
Thank you very much, Charles, for those insights. And you did a good thing introducing Dr. Ferdinand. We're with him in the plenary session, but he joins us again in studio. Thank you, Ferdinand. This time round, we want you to shed a little bit of light on the judging process. For starters, what do you look for in the entrants that are being brought forth for the banking awards?
Thank you very much. So the banking or the judging process, first of all, let me just tell you how it starts. So we start off by, of course, identifying the judges who, as we rightly have seen, are very high caliber professionals. Then we cluster them in different cohorts of expertise. And so if you're good in, say, agribusiness, if you're good in fintech, if you're good in commercial banking, then that way we have a cluster of people who will then exchange ideas and see how best can we say that this Bank A has won this award. So what we look for, first and foremost, is innovation. Okay, and of course, because this is self-disclosed, that innovation will depend on the quality of information the bank has provided in responding to the different questions that have been put in the banking awards criteria. Other than innovation and of course self-disclosure, we will compare publicly known information. So if Bank A tells me this, I have access to publicly available information. Because it's a comparative thing, I will be comparing different banks against each other. Yeah.
Very well. What do you make of the quality of entrants that we've seen this year?
I think being online submission, online evaluation, the quality improved tremendously on two accounts. One, there is the self-disclosure in the documents that were provided, but then there is the clarification that is happening on the platform. So we actually had two reference points. So there is what is on the online platform and what is in the documents to support what the bank is saying. So in my view, having judged in the banking award since 2008, I think this is a real improvement. And
what kind of progression have we seen since 2008 to date?
I think what we've seen and what I like the most is we are seeing more entrants, number one, and then different categories for the award. For instance, you will see today young bankers being awarded. You will see today agribusiness being awarded, product innovation. That wasn't there. When we started, I think we had less than 34 categories. Today we have actually 34 categories. We had maybe 10 or so. So where you would have the biggest bank or the best commercial bank. But now we are awarding fintech, we are awarding microfinance, we are awarding all those kind of innovative products that respond to the needs of the country.
Okay, Ferdinand, that's where we leave it. Thank you very much for shedding light on this. And maybe what would be your advice as a judge, before I let you go very briefly, as someone who judges these awards and has been judging since 2008, what are the key things that judges look for? Ukifanya hii, next year you'll be a winner.
Before I say that, I'll say congratulations to the winners. However, there is one thing, and probably this is because of my bias as an academic. So let me pick one question from the awards, and then you asked, do you have a credit committee? And then the respondent says yes and stops there. as a judge, I'm lost. Okay, so what makes you different from the other bank? So the more qualitative aspects you shed onto the entry, the better for the judging award. The other thing I was looking for is, so okay, you tell me, so this year we have underwritten, say, 41 billion in agribusiness, and I'm asking, okay, compared to what? Okay. So if it is comparative analysis vis-a-vis last year going forward and all those kind of analysis, then it gives me a better way to judge. So that's what I would say. The quality of the entry is, give me more information, give me more analysis.
You heard it from the judge's mouth. Next year when you tabling your entrance, give the judges background and information with regards to what you're tabling. Ferdinand, thank you. And all the best to everybody that put in their entry. We hope that you're the winner, but in every competition there is a winner. And in this case, there's no loser, because at the end of the day, banks serve a very important purpose in this community. We want to take another short breather. When we come back, the moment we have all been waiting for, we begin awarding those who've performed exemplary in the banking and finance sector. See you briefly.
Babe, tunafaa tujue status yetu.
Hapo hapana.
Unaniangusha msee. Namaanisha CRB status.
Wanaume ni madeni, hata gava iko na deni. Kwani mimi ni nani nisipe na deni?
Ni muhimu kujua CRB status yako. Ndio tujipange. Ama
hakuna mtu akona hiyo time ya kuenda sijui hapa hill, sijui Huduma Centers. Mimi hata siendangi tao kugongea watu milango ati clearance.
Hebu lete phone yako nikushow.
Sawa, shika.
Ni simple sana. Una dial *433#, alafu unaweka agency code 430430, kisha utapata report yako instantly.
Tatoti wewe ni msharp. Ona kama ingia.
Naona kakoka sawa.
You can download the Cristobal app on Google Play Store. Metropole CRB services are also found in Huduma Centers and in over 300 agents countrywide.
The entertainment industry is a multi-billion-dollar industry. But the question is, how can you get a share of the pie? On E-Magazine, we follow the money behind the glam and break it down for you, making sure you get a share of the pie. Catch E-Magazine at this time only on Metropole Television.
I've sat on many benches, many seats, visited different offices, seen different women in their different elements.
I have always been fighting for inclusion. That is why I was fighting even in the bank.
Women in different capacities.
Me, my life is so... I think we waste a lot of time as people sometimes.
Women who have experienced it all.
Who is Esther? When you're a CEO, there are so many responsibilities that lie with you.
And yet, nothing says how strong.
I need to get my money.
How resilient.
I said I did not die.
How willed they are.
I had never heard of this model of business before.
Like
the boss lady.
Because.
Boss lady.
The boss lady.
The boss lady.
Boss lady.
This is the boss lady.
Indeed, this is the boss lady. Catch new episodes every Wednesday at 7:30 p.m.
This is probably your ideal start to the day and a quiet end. But for us, we start with questions.
Are these the numbers that Kenyans are questioning? How do we interpret that? What is happening? Do you think now what should be, for what would qualify? What cross assumption? So do you feel that this is just swapping physical consolidation for IMF support?
Start your day with the questions that matter with Simba Elijah Charles Kiage.
It's agriculture that is the key driver of the Kenyan economy.
Anakuletea na kuzia bei ya chini na wewe inabidi pia uzie customer na bei ile ya chini.
For fresh beans, I can say it actually brings a good income.
Kama ni gunia moja
iko na 200 pieces, so hiyo shilingi 5 times 200.
Actually, rainwater is the best for crops.
Whether rain-fed or using rivers to irrigate.
Tunapanga kuweka drip line kwa shamba.
He had thought that we could pump the water with solar.
Different farmers have shared their stories on how they're turning produce to profit.
Akipata kama miti 300 hivi, atakuwa akiokota pesa kama majani.
This is money eating me. All this we have extensively covered.
This is a test greenhouse. I put it up to see if we can produce organic tomato. I'm not lying, it's very sweet.
And different things that farmers are doing to make profit from produce.
Kuamua ukulima wa makadamia ilikuwa ni kama ndoto.
We are still growing.
Weka mbolea vizuri inakuwa kitu ya kukusaidia.
These are net caps.
Other than the French beans you can see, we also have veggies.
Assume the reason why you're using hydroponics is because of the soil-borne problem.
Catch us every week on the Farm Journal here on Metropole TV. This is the Farm Journal.
Managing your finances starts with questions. Where do I put my money? What opportunities are available for my money? What ratios should go into savings, spending, and leisure, if you may? Now, trying to answer all these questions can sometimes mean you have to understand concepts like savings, loans, forex, stock markets, and sometimes politics, and honestly, sometimes it can get a bit overwhelming. On Eye on the Money, we take you through intelligent investment and finance management decisions so that you keep track of every coin that comes out of your pocket.
Ukiona, sema. Ukisikia, sema. Ukishuku, sema. Ripoti tatizo lolote la usalama kupitia SMS 988. Namba yako haitaonekana. Ujumbe huu hautakugharimu chochote. Weka akaunti yako na mtaa ambapo uhalifu unatendeka. Mulika uhalifu. Ujumbe huu umeletwa kwako na Wizara ya Mambo ya Ndani na Uratibu wa Serikali ya Kitaifa.
Why is it important to start your business fit? Because business is demanding. Your body needs to be ready. Successful business persons always stick to health first before the money. So join me, Douglas Karanja, on Shape Up. Every day at 6 a.m. on Metropole TV.
There's so many reasons to love sports. But one thing stands out. Numbers.
Straight from the big leagues.
Which is the biggest team in the English Premier League?
It is the numbers that make them stand out. Even when the muscles define the game, the numbers add value to the stats. Every swing comes with the number. On Sports Center, we go behind the game. On Sports Center, we go behind the game for the numbers. Metropole Sports Center at this time only on Metropole TV.
Markets Today is a place you need to be every single day on Metropole TV. We give you access to insights with regards to the financial market. What is happening? Where are people making money? Where are people losing money? And where do you need to place your money? We speak to the decision makers in this industry. the chief executive officers, the chief finance officers, permanent secretaries, people in the cabinet.
Money is starting to circulate.
Central banks globally are trying to offset that.
Consumer spending patterns.
Now let's look at the numbers.
We've not raised a single shilling of new equity capital.
To understand where is your money going to actually grow in the near term.
The market in which financial securities are exchanged or traded.
On Metropole TV, and I am your host, Bife Mwema, and see you then.
You have covered a lot of business stories, which makes me wonder, what is a good business story to you?
Simba, a good business story has to be first and most importantly factual.
Over 734,000 tons of containers through this port in 2018.
To the fermenting unit for fermentation, a process that takes approximately 3 hours. Secondly, it has to be timely.
Strict measures that have been put in place to ensure that there is no chance of spreading the coronavirus.
And objective.
Now it's been unfinished business in construction of some of the roads in Nairobi. A case in point is this Enterprise Road.
What does this mean to the Kenyan coffee farmer?
What this means for Kenyan coffee farmer is that...
Now that is a good business story to me.
My name is Victoria Amunga and this is Metropole TV.
When you hear the word business, what comes to mind? Skyscrapers, fast-moving economy, technology and innovation, dollar versus the shilling exchange rate, financial markets, or better still, the US versus China trade war? Is there a magic bullet that can spark Kenya into economic growth? How about this? How is Africa the next economic frontier? What does that even mean? Questions that keep popping up. Is foreign aid helping Africa develop, or rather is it stagnating it? Does good politics translate into economic development? Well, on Metropole Debrief, we break down business, telling you why it matters and showing you how and when it affects your bottom line. This and much more on the new season of Metropole Debrief at 8 p.m, where we're bold and balanced.
The world has transitioned to a virtual space. I mean, I literally get news, gossip, information on my phone, at home, when I wake up, in the shower, getting ready. When the OOTD has to be up, I mean, you got to give an update on that instant story. With all these interesting things online, you know you girls got you. I, Conchita Lilian, will always be on the lookout so that when you make it trend, I take it on air every Friday at 7:30 p.m. only on Metropole TV. And P.S. I hope your TV works, but if not, we always online.
In journalism training, only 5 viewpoints matter for a proper story. My experience as a business journalist has, however, taught me that there is more. So now I understand that before I walk into that interview, I have to look for the hidden. So for me, what sticks is the story behind the story. What would you say is that unique, very unique selling aspect that you can guarantee I will not find anywhere else?
Good question.
My name is Ingrid Nantege and this is Metropole Television.
From the time that you wake up to starting your day, Business AM will be around to give you economy trends just to get you ready to start your business day. Business AM with me, Simba, Elijah Charles Kiage, weekdays 7 a.m. to 9 a.m.
The work that goes into preparation of a business story is special. It demands detail without favor. The SME contribution to the Kenyan economy is immense. Data, more data, right? According to the Kenya National Bureau of Statistics, nearly 400,000 SMEs. And how many died? 2.2 million? We have it.
Now to give you more perspective on the state of SMEs in the country, we're joined live.
In 3, 2,
1, we're live.
SME contribution to the Kenyan economy has immensely grown from 13% in 1993 to nearly 30% in the year 2018, according to the Central Bank of Kenya. Now, in a 2016 survey done by the Kenya National Bureau. My name is Ndiro Ganga, and this is Metropole TV.
Ukiwa na shilingi 5,000 waweza fanya nazo nini? From street to street and from estate to estate. Tumekuwa tukiangazia biashara kadha wa kadha ambazo tumeweza kupata mawaidha hapa pale, jinsi ya kuwekeza na hata pia kuikuza biashara. Aha, ishakuwa. Haya basi wewe ungana nami Tabitha Muthoni ndani ya show ya Mwananchi. Show ni The Hustle.
Kila Alhamisi saa 1:30.
Nimenyimwa! It's time to take control of your credit information via our self-service platform. Monitoring your credit listing status has never been this easy. Simply register by dialing *433#, enter your ID number, enter agent number 430430. To complete registration, pay 100 Kenyan shillings via mobile money. You will then receive a link to your credit report. With Cristobal, know your listing status, who has listed you, your Metro score, your credit report, and get your certificate of clearance. You are now empowered to make sound economic decisions. Talk to us today.
Are you an SME looking to grow? At African Guarantee Fund, we believe in the potential of SMEs to drive Africa's growth. While SMEs make up over 80% of Africa's private sector, lack of adequate financing presents a huge barrier to their growth. Our goal is to bridge this financing gap by enabling financial institutions scale up their SME financing towards promotion of economic development and poverty reduction in Africa. Operating in over 40 countries, we have availed more than $2 billion throughout Africa, impacting over 20,000 SMEs, most of which are run by youth and women. Our commitment to empowering women-owned and led SMEs has allowed us to implement the Affirmative Finance Action for Women in Africa, AFAWA, which has a strong financial backing from G7 countries and African Development Bank. We take a strong focus in green financing through our Green Guarantee Facility, boosting the continent's efforts towards climate change mitigation and adaptation. Our very strong AA- rating by Fitch Ratings reflects our financially solid shareholders, strong capital position, and proven business model, and making us an employer of choice. Partner with us today and let's drive Africa's growth. African Guarantee Fund, a guarantee for African growth.
We're back and we're live on Metropole TV. This is Think Business Banking Awards 2020. My name is Ondiro Ganga, and it's such a pleasure and a privilege to have you here with us. I know I promised before the break that when we come back, we shall be getting right into the awards, but we will in a short while. But in the meantime, we want to acknowledge some of the people that are joining this award virtually. We have several, not several, but very many participants joining us via Zoom and being a part of our conversation today. I can see Jennifer Riria on my screen. I can see Evans Torrey Teach. I can see Kennedy Nanchoka. I can see Daniel Cracknell, among many other people, Caroline Chepkiri, Isaiah Omai. These are just some of the people in the banking space that have made time to join us virtually into this conversation. If you cannot join us via Zoom, you can always reach out to us at Metropole TV KE Ondiro Ganga. The hashtag to use is Best Banks in 2020. And let us know, as we edge closer to the awards, what banks are you preempting will take the big awards home? Which bank has served you well, and which bank would you like to give a thumbs up? Talk to us on social media. But before we get to that, I know adrenaline is high and their hearts are beating so far, so is yours. But we need to know who are the faces behind the names that will be read today. There was a list of judges that used a particular criterion, like Ferdinand explained earlier before, to decide who takes the coveted prizes today. Ferdinand, very briefly, take us through the list of judges.
Thank you, Ondiro. So it is my pleasure to introduce the judges who took part in the judging process in the Banking Awards 2020. And if you're there on Zoom, you're joining us, you can just wave at the people who are following us. So our first judge is Mbugua Njihia, who is a techpreneur, over 15 years experience in the technology space. Mbugua, if you're there, you can just wave. Or
Tell us more about Mbugua.
So Mbugua is an entrepreneur with over 15 years experience in technology space. He has been in this space for very many years, working with companies like Safaricom, Spark Venture Fund, advise on the Safaricom Healthcare Board. His business with Weekly Column and Business Daily running for over past 9 years. Very excellent profile for the theme we are having today.
Our next guest?
Our next judge is David Cracknell. I heard you mention his name.
Yes,
he must be joining
is.
us. David is CEO of First Principles. David, if you're there.
Go ahead, tell us more about David as we put him on screen.
So David is the Managing Director of First Principles Consulting Limited. He does consulting to financial institutions, policy makers, and has been working for over 25 years across Asia and Africa. And I mean, he's one thing I want to mention about David is he's always available to work. And he knows what I mean when I say this. During the very last mile of this work, he actually offered to judge a bit more. So thank you, David, for the work you have done during the judging process.
David is here. David, if you can just wave at the viewer who's joining us virtually.
Thank you, David. Thank you,
There
David.
you go.
Yeah. Our next judge is Tom Magara, who is a manager at Genesis Analytics. And he joined Genesis in 2016, consulted for a number of institutions, including banks, banking institutions, financial deepening, trust, and many other. So Tom, if you're there, you can just wave.
As we look for Tom, tell us more about him.
Tom is a manager in financial services. Obviously, we know what Genesis Analytics does. He has worked with financial institutions across Africa and therefore understands the financial space, the payment space, the business and operating models for commercial banks across Africa. Yeah.
On to our next judge.
Our next judge is Raymond Ngala. Raymond Ngala is MD Swivel Marketing, and he's a senior level business executive interested in knowing how executives deliver in the field. He's been at it for 24 years. He's been in trade marketing, consumer marketing. He participates in grassroots community, a community I also participate in. So David, thank you very much. And he brings very wide experience from a marketing perspective in the banking awards. So thank you, Raymond. I don't know whether he's there.
Okay, as we try to locate him, let's go to the next judge.
The next judge is Dan Awendo. Dan Awendo is the Managing Director, Home Africa, has more than 20 years experience in audit, being CEO, management consultancy, working across SMEs as a CEO, and therefore understands the financial space for in a very big way. So Dan Awendo, thank you very much for the work you did for us.
Just a minute, Ferdinand. I can see Raymond has joined us. Raymond, if you could please wave. There we go. He's done a lot of work with grassroots, as Ferdinand mentioned. That's Raymond.
Thank you, Raymond. Yeah, so as I was saying, Dan Awendo, current MD Home Africa. Just before that, he was the MD at Investec Capital. Quite a lot of experience in the strategy space, SME space, high impact entrepreneurs, and he is in the Standard newspaper as a captain of the industry. Thank you, Dan, for the work you've done. Our next judge is Sam Omukoko. You have met him before. He was one of the panelists in the topic of the day, responsible banking. So Sam is the group managing director and CEO of Metropole Corporation, both here in Kenya and in Uganda. And he is, of course, we know what Metropole does. The credit reference is a big issue for us, especially given we're in the banking awards. He's been involved in many interventions in the financial services. He is an associate of Chartered Institute of Banking, the UK, Kenya Institute of Bankers, and Banking and Finance Committee in Kenya. He holds a master's, this one I had to mention, in mathematics and statistics, a subject I love the most, and then holds a master's in finance, both from the university.
You had to add the university.
The university.
First, the fact that you learned mathematics, and two from the university.
Thank you, Sam. Thank you, Sam, for the work you've done. The next judge is Anthony Wagasha. Anthony Wagasha teaches at Strathmore University, and he has an associate director at the Risk Management Center at the Strathmore Business School. An interesting thing about Anthony is he's an emerging techpreneur. In Sub-Saharan Africa. He holds an MBA from Stanford Business School, formerly a banker at Merrill Lynch in New York, and a financial risk management consultant at KPMG, and currently teaching at Strathmore University and running a techpreneurship fund, a small firm in Nairobi. So thank you, Anthony. Our next judge is Silus Onyango, who is financial controller at Gorage Consumer Goods. He's a qualified accountant, over 15 years experience in finance with the key competencies financial management, business planning, forecasting, communication, and the like. He holds an MBA in finance, Bachelor of Commerce in accounting, and he's a certified public accountant of Kenya.
He is with us. Please wave to the viewer. There you go. Thank you very much.
Silus Onyango. And lastly, we have Walter Nyabundi. Walter is a loyalty and specialist project manager in Fortrack Research, and he has extensive project management, supervisory, and data collection skills. Over the years, he's been working and specializing in market and social research methods. He's been involved in managing a number of research projects in Kenya, and he's extremely passionate about issues touching the East Africa integration, devolution, and matters public policy in this country. Especially is spelled out in the African Charter on Democracy, Elections, and Governance. A very diverse gentleman. Thank you, Walter.
For his diversity, he joins us live via Zoom. Please wave. Please wave.
Thank you, thank you, Walter. And that is the list of judges who were involved. Like I said in the beginning, these were the gentlemen behind the judging process. I was the chief judge. That doesn't mean I was policing them around. I was lucky to be the chief judge. And one thing to mention, that none of these gentlemen, unless any one of them was paid without my knowledge, is paid to do the work. And therefore it is work we do out of professionalism. And now it's my pleasure to hand over the list of judges to Ondiro. And then we know, the list of winners and the people who have participated in the judging, in the banking awards process. So from here on, Ondiro, we are in your hands.
Ladies and gentlemen, esteemed colleagues in the banking sector and all the other sectors that are joining us live via Metropole TV, the moment of truth has come. This is the moment that all of us have been waiting for, to find out who gets featured in this year's Think Business Banking Awards 2020. And without wasting any more time, we begin with the microfinance bank division. Now, the first category that will be awarded is the fastest growing microfinance bank. And the winner is, drum rolls, Maisha Microfinance Bank. A big congratulations to Maisha Microfinance Bank for winning fastest growing microfinance bank in the country. Let's go to the second category, and that's the most efficient microfinance bank. As usual, you know the drill. Give me drum rolls, give me drum rolls. And the winner of this category is Faulu Microfinance Bank. Now, customers are the key to every business, and this category seeks to award the microfinance institution, rather, that takes care of its customers. This category is most customer-centric microfinance bank. And the winner of this category, taking care of its customers every single day, 24 hours a day, is KWFT Microfinance Bank. Finance Trust Microfinance Bank, the winners of most customer-centric microfinance bank. Moving on, Best MF Bank in Product Marketing. The winner in this category is Faulu Microfinance Bank. The second runners-up is, the first runners-up rather, is Kenya Women Finance Trust Microfinance Bank. Moving forward to Best MF Bank in Agriculture and Livestock Financing. The winner in this category is Kenya Women Finance Trust Microfinance Bank. The next category, they say innovate or die, disrupt or be disrupted. Best MF Bank in Product Innovation. The coveted award goes to Faulu Microfinance Bank. The first runners-up in this category is Kenya Women Finance Trust Microfinance Bank. This is how the microfinance bank sector performed, and those were the winners. But let's move on to the commercial space, and I know many people are beginning to hold their hearts and hold their breaths, wondering, is it our time to celebrate? Let's find out. The first category in commercial banks will be bank with the lowest loan charges, bank with the lowest charge on loans. And the winner in this category is, drum rolls, Bank of Baroda, Kenya. The first runners-up, Equity Bank. The bank with the lowest charge for individuals is the next category under commercial banks, and we are seeking to award banks that are charging the lowest charges to the borrowers who walk into their banks. The winner in this category is Equity Bank. The first runners-up, Standard Chartered Bank, and the second runners-up, EcoBank. A round of applause for the banks. The next category will be the bank with the lowest charge on SMEs. And just to give you a little bit of background on this award, a tariff survey on the banks will inform the winners in this category. And this means the basis of this ranking will be on 3 scenarios modeled around banking activities of 3 typical customers, assessing how each customer would have been charged for a similar transaction by each bank over a period of 12 months. The banks will then be ranked from the lowest in charges to the highest. And this means there will be 2 subcategories for individuals and for SMEs. We've already looked at individuals. How about SMEs? It's a sector that contributes a lot to the GDP, employs very many people, about over 15%, 30% to contribution to the GDP. Who takes the coveted prize? The winner of the bank with the lowest charge for SMEs is UBA Bank Kenya. The first runners-up is Guardian Bank, and the second runners-up, Paramount Bank. Moving on, digital is the future and the future is now. Who has done best in digital banking? The winner in this category is CDN Bank. Moving on, if you have, you must give, and the hand that gives is the hand that receives. Let's take a look at the best bank in sustainable corporate social responsibility. And the winner in this category is Equity Bank. Moving forward to the most efficient bank, the winner is the Bank of India, Kenya. The first runners-up, the Bank of Baroda, Kenya, and the second runners-up, I&M Bank. Best commercial bank in microfinance, the winner is Equity Bank. The best bank in corporate banking, the award goes to Citibank. The first runners-up, Equity Bank. To the retail sector now, the bank that gets the recognition tonight is Equity Bank. Moving forward to trade financing, which bank takes the day? The bank that takes it on best rank in trade financing is Citibank Kenya. The first runners-up being Equity Bank and the second runners-up being CDN Bank. I always say agriculture is the backbone of Kenya's economy. So which bank is fueling agriculture growth in the country? The best bank in agriculture and livestock financing is Equity Bank. The first runners-up being CDN Bank. Moving forward to asset finance, the winning bank is Equity Bank. The bank that takes the day in the Islamic financing space is the Gulf African Bank. Earlier on in our conversation, we equally mentioned that there are about, give or take, 26,500 mortgages in the country. To meaning a population of 47 million Kenyans, mortgages are not being uptaken as fast and as quickly and as widely as they should, the mortgage penetration in the country is low. However, which bank is trying to ensure that as the days go by, they try and ensure that they can offer mortgages to Kenyans at an affordable rate, longer periods, and substantial amounts that can get them properties in Nairobi and in the country at large? The bank that takes the day in best bank in mortgage finance is Equity Bank. Moving on, best bank in the SME banking space is Equity Bank. The first runners-up in this category is Bank of Baroda, Kenya, and the second runners-up, CDN Bank. Moving on, the best bank in product marketing, the award goes to Gulf African Bank. The first runners-up, Equity Bank, and the second runners-up, ABC Bank. Moving on, best bank in product innovation. This will go to Citibank. First runners-up, Equity Bank, and second runners-up, Victoria Commercial Bank. Best bank in agency banking, the winner tonight is Equity Bank. The best bank in internet banking tonight is Citibank. The first runners-up being Equity Bank and the second runners-up CDN Bank. Moving forward, staying in the digital space, best bank in mobile banking goes to Equity Bank. First runners-up Citibank Kenya and second runners-up CDN Bank. The most customer-centric bank in the country this year goes to Equity Bank. First runners-up Victoria Commercial Bank. Looking at the banking tiers, the best bank in tier 4 is Paramount Bank. First runners-up Middle East Bank and second runners-up Oriental Bank. Moving on, best bank in tier 3 banking, the winner tonight is Victoria Commercial Bank. The first runners-up GT Bank and the second runners-up Guardian Bank. Moving on to tier 2, the winner tonight is Citibank. First runners-up Bank of Baroda, Kenya. Second runners-up Bank of India, Kenya. On to tier 1 now. The winner tonight is Equity Bank. First runners-up Kenya Commercial Bank and second runners-up Diamond Trust Bank. That is how the commercial banking category performed. Congratulations to all the winners, all the first runners-up and second runners-up. And even if you were not featured today, the service that you continue to offer Kenyans is more than appreciated by Kenyans. And here at Metropole TV, together with the Think Business Banking Awards 2020. We now want to move to special recognitions. We're almost coming towards a close of these awards, and this is a very important category because these are people that have had exemplary performing in their respective fields, and they're being feted, being awarded, and being celebrated for their time, for their effort, and for the leadership that they have shown in these categories. The first one will be Special Judges Award for Product Innovation. And the winner of this category is the Elimu Scholarship Program by Equity Bank. The second category would be Outstanding Young Banker of the Year. And the winner is Caroline Chepkirui of Microfinance Bank. Moving on to Outstanding Young Banker of the Year, we have Dennis Maraga from Equity Bank. Corporate Banker of the Year, the award goes to Moses Durango from Equity Bank. The Chief Executive Officer of the Year goes to Apollon Njoroge of Faulu Microfinance Bank. Overall Best Microfinance Bank in Kenya 2020 will go to Faulu Microfinance Bank. This is interesting. Let's take a look at Chief Executive Officer of the Year, Commercial Banks, and the award goes to Dr. James Mwangi of Equity Bank. We're nearing the close of the award category, so the second last category is Overall Best Bank in Kenya 2020, and the winner is Equity Bank. Finally, the Lifetime Achievement in Banking Award. Because this is the last, let's give a little bit background to it. Now, when the nominations were sent out, CEOs of banks were invited to send nominations for long-serving individuals in the banking sector, active, retired, or posthumous, for considerations for the Lifetime Achievement in Banking. The individual must have spent at least 20 years in banking and had an outstanding and lasting contribution towards the growth of the banking sector. The moment has come. Who does the Lifetime Achievement in Banking Award go to in 2020? And the winner is Dr. Jennifer Iria of Kenya Women Finance Trust. A round of applause for the doctor. A big and hearty congratulations to all the winners tonight. The latest winner being Dr. Jennifer Iria of Kenya Women Finance Trust, and she wins Lifetime Achievement in Banking Award. We'd like to hear from some of the winners tonight, how they feel about their wins, what they did right rather to accord them the privilege of being the winners this year, and what they think needs to be done to improve the sector further come 2021. We want to take a short breather. When we come back, speeches from the winners of the night.
COVID-19 is an infectious disease caused by the coronavirus. Protect yourself by practicing proper hygiene. Avoid touching your eyes, nose, and mouth, and cough into a tissue or onto your elbow. If you develop symptoms like coughing or difficulty breathing, call 719 or *719#. Together, we will beat this virus. This message has been brought to you by the Lotto Foundation.
Babe, tunafaa tujue status yetu.
Hapo hapana.
Unaniangusha msee. Namaanisha CRB status.
Wanaume ni madeni, hata gava iko na deni. Kwani mimi ni nani nisikie na deni?
Ni muhimu kujua CRB status yako. Ndio tujipange. Ama
hakuna mtu akona hiyo time ya kuenda sijui hapa hill, sijui Huduma Centers. Mimi hata siendangi tao kugongea watu milango ati clearance.
Hebu lete phone yako nikushow.
Sawa, shika.
Ni simple sana. Una dial *433#, alafu unaweka agency code 430430, kisha utapata report yako instantly.
Tatoti wewe ni msharp. Ona kama ingia.
Naona kakoka sawa.
You can download the Cristobal app on Google Play Store. Metropole CRB services are also found in Huduma Centers and in over 300 agents countrywide.
Markets Today is a place you need to be every single day on Metropole TV. We give you access to insights with regards to the financial market. What is happening? Where are people making money? Where are people losing money? And where do you need to place your money? We speak to the decision makers in this industry. The chief executive officers, the chief finance officers, permanent secretaries, people in the cabinet.
Money is starting to circulate.
Central banks globally are trying to offset that.
Consumer spending patterns.
Now let's look at the numbers.
We've not raised a single shilling of new equity capital.
To understand where is your money going to actually grow in the near term.
The market in which financial securities are exchanged or traded.
On Metropole TV, and I am your host, Bife Mwema, and see you then.
The entertainment industry is a multi-billion-dollar industry. But the question is, how can you get a share of the pie? On E-Magazine, we follow the money behind the glam and break it down for you, making sure you get a share of the pie. Catch E-Magazine at this time only on Metropole Television.
I've sat on many benches, many seats, visited different offices, seen different women in their different elements.
I have always been fighting for inclusion. That is why I was fighting even in the bank.
Women in different capacities.
Me, my life is so... I think we waste a lot of time as people, sometimes.
Women who have experienced it all.
Who is Esther? When you're a CEO, there are so many responsibilities that lie with you.
And yet, nothing says how strong.
I need to get my money.
How resilient.
I said I did not die.
How willed they are.
I had never heard of this model of business before.
Like
the boss lady.
Because.
Boss lady. The boss lady.
The boss lady.
Boss lady.
This is the boss lady.
Indeed, this is the boss lady. Catch new episodes every Wednesday at 7:30 p.m.
Thank you for staying with Metropole TV. This is Think Business Banking Awards 2020. We are almost coming to a close of the celebration today. It's been such a good time virtually celebrating the wins. We've seen the big winners of the night, and we want to honor these winners by giving them a minute or two to have a say on how they feel about their victories tonight. This is different. Because previously, when you win, you walk on stage, you receive your award, and you give your speech. But this year, they're doing it virtually. The first guest or the first winner to join me will be Apollo Njoroge. He won Chief Executive Officer of the Year, and that is Microfinance Bank. Apollo, thank you for making time. Thank you for being here.
Thank you very much.
How do you feel?
I feel very good. I'm very humbled and very excited about the award. Yes.
And why would you say, what would you say were some of the factors that propelled you to this win?
I think let me summarize it in a very short speech I want to make. Distinguished guests, colleagues, ladies and gentlemen, this is an extremely special moment for Faulu Microfinance Bank and myself. I'm humbled by this recognition and uplifted by the honor of being chosen CEO of the Year in the Microfinance Bank category by Think Business. But this would not have been made possible without the support of our staff who have worked very hard to deliver exceptional results and offer true value to our customers through innovative products and good customer experience. This honor is also for our Faulu Board of Directors, fellow colleagues, family who have believed in me and given me unreserved support. All of them have helped sustain and shape the vision of our work, which often is undertaken under very challenging environment. These awards are a strong endorsement of the bank's growth from our humble beginnings in 1991 to fully fledged bank that we've become by the year 2020. We at Faulu are delighted to be the leading microfinance bank second year in a row, and we are really humbled. I wish to thank our customers for believing in us, allowing us to plan, grow, and protect the investments. And I also want to assure you that we remain focused in making strategic investments to improve our overall service offering. I would like to assure our customers, our staff, our communities, and our business partners that we are committed to live up to our vision of being your most trusted financial partner, passionate about helping you achieve your financial goals. Lastly, as a member of the Old Mutual Group, we celebrate 175 years of existence in Africa and 100 years in East Africa, a testament of your trust in us as we continue to put your needs at the center of our business. During these uncertain times, we'd like to reaffirm our commitment of being a certain friend in uncertain times. Thank you for choosing Faulu Microfinance Bank.
Thank you so much, Apollo. Congratulations on your win tonight. We now want to cross over to Equity Bank, Miringu Nganga. Equity has won several awards tonight, just to mention a few. The lowest charge for individuals went to Equity. Sustainable corporate social responsibility went to Equity. Commercial bank in microfinance went to Equity. Agriculture and livestock went to Equity. Mortgage, SME, agency banking, most customer-centric bank, mobile banking, and best bank in Tier 1 equally went to Equity. Miringu, if you can hear us, tonight has been a big night for Equity, and Equity has had big wins tonight. Talk to us.
Thank you very much. I think I would recognize first the big business for one, recognizing commercial banks and microfinance institutions to the contributions that they are doing to the Kenyan banking sector through products and services and influencing banking on both services and then consumer segments and also the strategy. It is truly an honor to be recognized as the overall best bank in Kenya and the best Tier 1 bank, to mention that a few of the awards, and possibly also singling out the recognition of the efforts that we have put in technology and how we are serving the customers and becoming customer-centric. Our business model continues to evolve to meet the growing needs of our customers, and we thank them for believing in us and for choosing Equity Bank as their banking partner of choice. We actually have specialized in providing professional, flexible, and integrated banking services to both retail, SME, and corporate. Our tailored products, which entails also systems and processes and products designed mainly for diverse needs of our customers, and most importantly, adopting technology and innovation to allow us to offer them alternative digital banking through channels and increased efficiency and customer satisfaction. No wonder then they are rating us in terms of being very customer centric. And therefore, we would say that it is a license that we are getting from these customers. We are excited today to have actually gotten 23 awards, among them having been honored as influential leadership and offered in the sector. And we feel honored also for being given that challenging position in the banking to convert that norm into culture that promotes financial inclusion and regional expansion. Of course, we have been in the forefront on corporate social responsibility, which is very evident, and the socio-economic empowerment of our customers. Today, we are grateful because our CEO, Dr. James Mwangi, has won Think Business CEO of the Year Award 2020. This is the 9th time, actually, year running in that recognition of his outstanding accomplishment for year 2019. And of course, agriculture being our core in Kenya, our very own Esther Moyori has also been recognized for Lifetime Achievement Award for her contribution in agriculture and financial sector. As a bank, we have been honored and have been nurturing young talents. And no wonder then we have Dennis Maranga emerging as the Young Banker of the Year. And on corporate side, having Moses Irango emerging as Corporate Banker of the Year. This for sure makes us feel more committed to the institution and to our customers and to the stakeholders. And once again, we say thank you for believing in us, and we affirm our commitments to champion for the socio-economic empowerment of people of Africa. Thank you very much.
Miringo, thank you for that speech, and also say hello to your little girl. She was there in your room while you're making a speech celebrating with you. Actually, it's a big night for Equity. We can't fault the little girl. We now want to move on to the next category and give the lady her moment. And this was the Lifetime Achievement in Banking Award. Over 20 years experience, exemplary contribution to the growth of the sector. And the award went to Dr. Jennifer Uri of Kenya Women Finance Trust. Dr. Uri, if you can hear me, this is your moment. Dr. Jennifer, if you can hear me, this is your moment. She has won the Lifetime Achievement Award this year at the 2020 Think Business Banking Award. There she is joining me. Good lady, take it away.
Thank you very much. I wish to thank the judges, thank the host, thank everybody who has to do with this award. I thank God today for this award. I'm alive to see it and to receive it, not on my behalf, but on behalf of the women of this country. The women form the core of the economy. And for me, this award testifies to the fact that women are bankable. When I'm banking with women, we had to beg to be allowed into the banking halls. We are broken into the banking halls. We have taken over. All these banks here run for the women because the women are and they are bankers. I want to say thank you for this award because it also testifies to the fact that financial inclusion is very important for any economy. Research has shown that if you include women who are entirely excluded, because they're excluded in very many areas, the financial sector being a very big culprit of this. If you include women, You do not double your incomes and anything else, but you even triple. You add trillions of dollars in the economies. So Kenya Women Microfinance Bank has provided not only, does not run for profit. Kenya Women Microfinance Bank deals with assisting women to transform the way the world works for them and their families. The products, therefore, are those products that touch lives. Yes, we believe in sustainability. We believe in profitability, but that is not what drives us. What drives the bank and what has driven my quest for women's inclusion in financial services globally, in Kenya, in Africa, and globally, is the fact that you touch a life, you touch so many lives through a woman. And this requires several things. That is why Kenya Women Microfinance Bank has got the customer-centric award. Because if you have to touch lives, you need to be close to your clients, you need to understand them, you need to begin with what they know and you build on that. That requires a lot of input. It will not give you a lot of profit, but it will give you a lot of satisfaction that you have touched a life and you have transformed a life. Now, this could not have been possible without the staff. Having a countrywide network in 45 counties out of 47, serving women in villages requires a lot of contribution from staff and board, and I want to thank them. We have had, over the years, very committed staff. Some of them have served as long as I've served. I've served for 30 years. This is my 31st. And I've staff who have served 25 years after me. It requires commitment, concentration, and consistency. And it requires a heart that loves, and we love our clients. Thank you very much.
Dr. Harry, what a way to put it. There's nothing more to add and there's nothing to take out of that speech. It was holistic in all aspects. To empower a woman, the trickle-down effect is massive on the economy. What a way to end the award show today by awarding Dr. Jennifer Iria. Remember, August will be the Women's Month. What a way to usher in Women's Month in August by honoring a woman with exemplary performance in the banking sector through Kenya Women Finance Trust. Over 20 years experience, and her impact is undeniable. It has been so much fun suiting up and sitting at home and watching this event. It has been a great honor and pleasure for me, Ndiro Ganga, and the whole Metropole TV fraternity to be your official broadcast partner and bring you the Think Business 2020 Banking Award straight to your home. Remember, the hashtag that we've been using is Best Banks in Kenya 2020. Keep talking to us, keep engaging us. We'd love to hear from you. Congratulate the winners and also give her to those who did not take an award home. Next year is a new slate and a new opportunity for them to take bigger and better awards home. The theme for this year was responsible banking, and we hope that through this year to next year, we will see different banks adopt different strategies that will lead to responsible banking. As the GMD of Metropole TV said, banking must be driven by data-backed and data-centered decisions. There's nothing to add and there's nothing to take out. It's been an absolute pleasure. My name is Ndiro Ganga. Enjoy your evening. Enjoy the rest of our broadcasting. And once again, congratulations to the winners.
Nimenyimwa! Nimenyimwa!
It's time to take control of your credit information via our self-service platform. Monitoring your credit listing status has never been this easy. Simply register by dialing *433#, enter your ID number, enter agent number 430430. To complete registration, pay 100 Kenyan shillings via mobile money. You will then receive a link to your credit report. With Cristobal, know your listing status, who has listed you, your Metro score, your credit report, and get your certificate of clearance. You are now empowered to make sound economic decisions. Talk to us today.
Ukiwa na shilingi 5,000 waweza fanya nazo nini? From street to street and from estate to estate. Tumekuwa tukiangazia biashara kadha wa kadha ambazo tumeweza kupata mawaidha hapa pale, jinsi ya kuwekeza na hata pia kuikuza biashara. Aha, ishakuwa. Haya basi wewe ungana nami Tabitha Muthoni.